Now we're now going to look at the company final accounts for 2019. Now on the left hand side, we're going to write down where everything goes. So land and buildings, balance sheet. Accumulated depreciation, lands and buildings, balance sheet. Delivery vans, balance sheet. Discount received on the credit side, P&L. Profit and loss balance on the first to the first, P&L. That's a profit brought forward. Opening stock, trading account. Debenture interest, P&L. 3% investments, balance sheet. Patent, balance sheet. Purchases and sales, trading account. Dividends paid, P&L. Bad debt provision, balance sheet. Debtors and creditors, balance sheet. Bank overdraft, balance sheet. Salaries and general expenses, P&L. 7% debentures, balance sheet. Ordinary shares, balance sheet. Preference shares, balance sheet. VAT, which is a liability, balance sheet. Advertising, it's a cost, P&L. Capital reserve, balance sheet. So now we know where everything goes. We can then start looking at the adjustments. And the first adjustment then, yes, what we're going to do is we're going to prepare debits and credits for each one. The following information and instructions are to be taken into account. Stock at cost on the 31st of the 12th, 2018 was 75,400. This figure includes damaged stock which cost 6,000 but now has a net realizable value of 75% of cost. So let's have a look at the adjustment of that. So the damaged stock then is 6,000. It's now worth 75% of 6,000, which is 4,500. So therefore there's a loss in value. So the closing stock is 75,400 minus the loss in value, which is 73,900. That's my closing stock figure. And we take that into the accounts by doing our adjustments. One, debit closing stock in the balance sheet, 73,900 because it's an asset. Credit closing stock in the trading account, 73,900 because it's reducing a cost. Now we go on to the second adjustment, and the second adjustment then, it says during the year, stock which cost 7,000 was destroyed by fire. The insurance company has agreed to pay a compensation of 5,100. Now there's no workings on this. Because we have counted the closing stock, any adjustments to stock during the year affects purchases. So the adjustment is we're going to reduce our purchases. So credit purchases in the trading account, 7,000, we're reducing them. Debit insurance company, it's a current asset in the balance sheet, 5,100. And debit loss due to fire, it's a cost of 1,900. So that's the first two adjustments done.